Welcome back, dear friends, to this lecture series on financial analysis of energy audit and solar projects. In this short video, we would be discussing a very important concept called as simple payback period. It's a very interesting concept and often used for back of the envelope calculations in evaluating the financial viability of energy audit projects as well as solar projects. So at the end of this lecture, you would be in a position to understand what this concept is and apply this concept for small practical engineering problems of economic viability of energy audit and economic viability of solar projects. In this lecture, I plan to discuss only the first method, simple payback period method, and in the subsequent lectures, I would be discussing the other two methods, very important methods, namely the net present value method and internal rate of return method, which would be helping you to independently access the energy audit and solar proposals. What is simple payback period? As the name indicates, it is an indication, it is a parameter which gives us a period. Period is a time, and to define it, it is a ratio which helps us calculate the time period for recovering the investments or capital investments gone into the energy audit projects or solar projects. Obviously, when you are talking about a concept like simple payback period, the unit would be the unit of time. So the simple payback period could be expressed in years, it could be expressed in months, or it would be expressed in days. So whether to express it in days, months, or years would depend upon the investment which has gone into this project and the savings which one gets. If the savings are huge, then one might express the simple payback period in days. If the savings are reasonable, then one can go for expressing it in months or years. So if we divide the initial investment by the annual savings, what we obtain as a solution is the simple payback period expressed in years. So the capital investment made upon the cumulative savings over a period of a year, that is the annual savings, that ratio would give us simple payback period in years. Similarly, if we get a ratio of investments and divide it by the monthly savings, that would give us the simple payback period in months. And now it would be very much obvious to you that if the simple payback period is to be expressed in days, then we need to consider daily savings in the denominator. So note that every time the numerator would be the initial investment, the capital investment made for a particular proposal. Now, in order to understand this better, we take an example of solar water heater. Suppose we want to calculate a simple payback period for a solar water heater, then what could be the data required? We would be required to know what is the initial investment of purchasing and installing a solar water heater. Now, when one purchases solar water heater, assuming that initially the household was using electricity for heating the water, use of solar water heater would obviously save us electricity. So the data on what is the electricity saved over a period of a year, that is the annual electricity saved, becomes important in order to calculate the simple payback period. Now, annual electricity saved has to be converted into the annual savings expressed in the local currency. So it means that we need to know the purchase price of each unit of electricity, that is known as tariff. So we need to have an information about the tariff rate prevailing in that location. We need to know the annual electricity saved and the cost of solar water heater in order to arrive at the simple payback period. This is an example for which I had taken the data from India, and the conversion is as follows. $1 is approximately 70 Indian rupees INR, and this would give us an idea of the calculation of simple payback period. So for example, a typical solar water heater for household costs us rupees 30,000, and let us say that because of the use of solar water heater, that household has switched from the electric heater to solar water heater and saved 600 units of electricity every year. Let us say that the local grid, so it sells the electricity at the rate of rupees 10 per unit. So obviously the annual savings would be 600 units per year into rupees 10 per unit, which comes to 6,000 rupees. So 6,000 Indian national rupees is the annual savings, and the investment is rupees 30,000. So typically the investment is 30,000 and the annual savings is 6,000. That gives us the simple payback period as 5 years. If you are staying in some other location where the tariff rate is different, if you are staying in some other country where the cost of solar water heater is to be expressed in some other currency, so we need not be afraid of the methodology. The methodology remains the same. We need to take, irrespective of the currency used, the same method will be applicable for calculation of simple payback period. So I would recommend that you use your own data of the cost of solar water heater, own currency and own tariff rate for calculating the simple payback period. Obviously, the unit of simple payback period would be the years in this case. It could have been months if you are taking the monthly savings, and it could be days if you are considering the daily savings. Similarly, I take an example of energy efficiency project. In this case, we are interested in calculating a simple payback period for an option of replacing the conventional fluorescent tubes with the energy efficient LEDs. Now, in order to calculate the simple payback period, you must have guessed that we need to have the data of the cost of LEDs and the number of LEDs. So that would give us the initial investment or the capital cost, which is the numerator of the expression of simple payback period. So simple payback period, for calculating the initial investment, we need to know the cost of LED and the number of LEDs. And similar to our calculations of solar water heater, we need to arrive at the electricity saved because of switching towards the LEDs, and we need to have reasonable information about the tariff or the purchase price of electricity. So tariffs and savings would give us the annual savings, which is the denominator of the expression, and the cost of LEDs and the number of LEDs would give us the initial investment. So initial investment on LEDs upon the savings in whatever currency we are talking about, that annual savings would give us the time period, which is called as a simple payback period. I hope that this concept of simple payback period is very clear to you, and you would be taking real life examples for calculating the simple payback period for the energy conservation options in the real engineering life. There are certain limitations of simple payback period which we will be discussing in the next class, and we will be taking the next concept of time value of money and present value for financial analysis, a very interesting concept. Thank you for now. Bye.